And joining me now with more is Michael Venuto. He's the Chief Investment Officer and co-founder of Tidal Financial Group. Michael, it's great to have you on the show this morning. There's a lot to talk about. Let's start with cryptocurrency. I want to hear from you in terms of what kind of stake you have in the game with your particular funds and what you think about this rapid rise of Bitcoin amid some of the market volatility.
Yeah, it's nice to see it decoupled. So Tidal, the company that I'm the CIO of, we're an ETF platform. We help people launch, grow, and operate ETFs. The first ETF we ever did is Block, B-L-O-K, which is the largest blockchain ETF. So we're pretty exposed. We've also been behind Misty, which is MicroStrategy with a yield, which with all the volatility, you can generate a high yield off MicroStrategy using options, essentially. That's in the yield max funds. So we've seen a lot going on in the crypto space. I love the decoupling. I love that we're seeing a weaker dollar. I love that we're seeing Bitcoin and gold go up at the same time. We have another client on our platform that has a Bitcoin and gold fund. So $1 gets you $1 of gold and $1 of Bitcoin.
Interesting.
So it's a nice way to play that debasement trade.
Now, decoupling, when you say that, do you mean that Bitcoin has been decoupling from technology stocks? I mean, historically, of late, we had seen Bitcoin moving almost like a risk asset in line with technology names.
Yeah, so Bitcoin has that similarity to gold. It's not just the store of value story or limited supply. It's also that we don't really know how it's going to behave in which environment. Sometimes it's a flight to safety, sometimes it's an inflation beneficiary, sometimes it's a risk-on asset. And the recent decoupling is from NVIDIA and all the AI stories. That's been helpful because we saw them pull back and Bitcoin rally.
Yeah. So maybe it is a sweet spot in terms of there are different ways that it can be advantageous, it sounds like, in different environments.
I think small allocations for institutions make a lot of sense as a diversifier. Very little does a lot.
Yeah. Okay, so then let's talk more about that diversification. Obviously, we've seen a lot of market volatility, and of course, the president campaigned on U.S. exceptionalism, yet we've seen international stocks as their economies have weakened, and they've had to lower interest rates and even ramp up spending. Some of those international stocks have been outperforming. What does a diversified, healthy portfolio look like to you this year?
Yeah, so it's more than just international. It's more than just market cap. It's going into commodities. It's going into cash. It's going into alternatives for income, using options, things like that. For our platform, we actually created a fund, Fire Funds, F-I-R-S, which is the most diversified thing I could do. We basically took a bunch of our clients' funds, and it includes Bitcoin, it includes gold, it includes commodities, it includes bonds. So diversification is working this year. That's really the headline, because you had 2022 where bonds and stocks were down and gold did nothing. Didn't work that year. You have 2025, gold's up massively, Bitcoin's up massively. Bonds are actually up, even though we're all hearing a story of them selling off.
Yeah.
Stocks, not so much.
Do you think that the worst is behind us in terms of this market volatility?
I wish I could say yes. I believe your earlier guest said the same thing. We have uncertainty until markets get some sort of certainty. Yeah. Until the tariff tantrums are done, we're going to see some volatility.
So tariffs obviously are one element of it. I think there is concern, in the economy that a recession might come in the wake of this as consumers get worried about higher prices, less access, a weakening jobs market. Is that something that you're forecasting for?
So we don't see that at all with our clients. They're not pulling back. But when you're not sure what you're up against, it's hard to make long-term business decisions. Yeah. And if this persists for a long time, it's literally impossible not to have a recession if we persist with uncertainty.
Interesting. And now, what about some income solutions that might be alternatives to bonds in this environment?
Yeah, so we've been seeing an enormous amount of interest in derivative-based option income. So we have the Yield Max client I mentioned earlier with their suite. We have a client that just did one with the ticker Omaha, O-M-A-H, which takes all the positions in Berkshire Hathaway and Berk itself, and then uses options to generate a yield, since Berk doesn't do a big dividend. That's seen a lot of interest as of late. We've seen some zero DTE things. Most of it is taking the volatility that persists in the market, harvesting it through options, and distributing it to investors.
Interesting. And so in terms of how you would describe this environment and what you expect ahead for our viewers, what can you leave us with, Michael?
Volatility and get diversified.
In this environment.
Yeah.
Michael Venuto is the Chief Investment Officer and co-founder of Tidal Financial Group, joining in studio. Michael, thank you.
Thank you, Christina.